Due to the ongoing conflict between Russia and Ukraine beginning February 24, 2022, the United States banned the purchase of Russian oil on March 8, 2022. In a pricing war that Saudi Arabia and Russia started on March 8, 2020, exactly 2 years ago, when the COVID-19 pandemic was ravaging the globe, the price of oil fell by 65% on a quarterly basis. When Russia exited the Organization of the Petroleum Exporting Countries discussion of proposed oil production cuts due to the pandemic, it was a well-calculated move that ultimately rendered the OPEC alliance powerless as Saudi Arabia, the key member of OPEC, sided with the anti-production cuts group. The 13 member nations of OPEC, which was established in September 1960, collectively account for 44% of the world's oil production and 81.5% of its known oil reserves. The goal of OPEC is to maintain stable oil prices so that consumers may consistently and effectively get petroleum. On the other hand, Saudi Arabia and Russia both produce 17% and 12% of the world's oil, respectively. Thus, approximately one-third of the world's oil is produced by Russia and Saudi Arabia together. The United States is the world's largest oil producer, producing 18.6% of all oil. An oil embargo was imposed on nations, including the USA and the UK, that had backed Israel in the Yom Kippur War of 1973 by OPEC, which was headed by Saudi Arabia. As a result, oil prices in March 1974 increased by about 300%, from $3 per barrel to around $12 per barrel. This is referred to as either the first oil crisis or the 1973 oil crisis. Due to the Iranian Revolution, oil production decreased in 1979. The second oil crisis, which occurred in 1979, is known by the names of both. Prior to 1970, the USA imported oil from Venezuela and Canada but not from the Middle East because of the expensive shipping costs. In 1959, US President Dwight Eisenhower implemented import restrictions on foreign oil, which persisted until 1973. The mandatory oil quota import program, which aimed to limit American dependence on foreign oil, had disastrous unintended consequences and caused the domestic U.S. oil production to decline beginning in the early 1970s because domestic U.S. oil extraction was proving to be less profitable than importing oil. The United States began buying oil from the Middle East in the early 1970s. U.S. oil imports doubled to 6.2 million barrels per day from 1970 to 1973. As a result, the U.S.'s reliance on foreign oil has greatly expanded. The USSR had the largest oil reserves in the world before its dissolution on December 26, 1991, which alarmed the USA. Following the dissolution of the USSR, Russia now holds a 12% market share for oil production worldwide. By this time, Saudi Arabia, which accounts for 17% of world oil output and has the power to influence events in the petroleum industry, was recognized as being important by both the USA and Russia. And the US and Russia did everything they could to court Saudi Arabia. On a global scale, a barrel is used to compute oil prices. 159 liters of oil are contained in a barrel. The price of a barrel of crude oil reached $110 on March 2, 2022, when the Russia-Ukraine war was in full swing and the danger of a US embargo on Russian oil imports loomed large. The embargo was subsequently implemented on March 8, 2022. Vladimir Putin, the president of Russia, has already issued a warning that if the United States and the West impose sanctions on its oil, the price of a barrel will rise to $300. On the cost of life for every person in the world, this will have a significant impact. Less oil was consumed in the 2 years following the COVID-19 outbreak as fewer people traveled. Saudi Arabia declared economic war on Russia's energy sector over the weekend of March 7 to 8. The record 3.5 million barrels per day (BD) drop in demand brought on by the coronavirus outbreak had led to depressed oil prices, but Russian President Vladimir Putin had refused to reduce oil production. Oil prices fell by 25% on Monday as a result of Saudi Arabia's unilateral price cuts and current oil market oversupply. The confrontation between Saudi Arabia and Russia comes at an odd time. The coronavirus pandemic, which shut down substantial portions of the Chinese economy in February and is almost going to drag the economies of Europe, Japan, and the United States into recession, has already caused a significant decline in global demand. Shale companies have seen cumulative negative cash flow of over $280 billion since 2007, according to an analysis by Evercore ISI. U.S. banks and private equity firms, which have financed the shale boom's expansion, are beginning to scale back their support of fracking producers as their balance sheets deteriorate. According to recent reports, over $140 billion in debt for the exploration and production sector and over $300 billion for related gathering, processing, and transportation sectors are at risk of becoming junk debt. If you enjoyed the video, smash the like button.